Receiving regulatory approval to bring its iPad to China. Yes, it needed regulatory approval. And that, of course, opens the door to billions of potential new users.
Now, how can you play the future growth without necessarily buying Apple at these high levels? With us is Jeff Reeves. He is editor of InvestorPlace.com. You've got three stocks. Let's get right to them because it's a great idea.
Sure.
A lot of people think $600 is too much for Apple right now.
Yeah.
It's not going to go down, but they want to get into it. Fusion IO. The symbol is FIO. Their chief scientist is Steve Wozniak, the co-creator of Apple.
Father of Apple. Yeah, I mean, what's not to like about that? And I mean, Fusion IO not only has the Apple angle to it, I think it's really attractive to people, but another reason people should be really interested is just at the forefront of this kind of cloud computing
What do they do,
craze.
by the way? Tell us.
They're kind of a mix of software and hardware that like runs IT infrastructure. They're actually behind the scenes running the iTunes operations and the Apple website itself. They help optimize a business's network. I mean, there's a lot of demand for this, especially for a company like Apple that has a lot of traffic coming through. So it gets 25% of its revenue from its Apple relationship. So you're a little diversified beyond that. But just to give you kind of an idea of how many people like this Fusion IO technology, 25% of its revenue on the other side comes from a company called Facebook. So when two companies like that, if they believe in this technology, you got to believe it's going somewhere.
And you wouldn't be buying it at the 52-week high, as you saw on that chart, which is always nice. You don't want to buy at the high.
And again, I mean, I love Apple. I think everybody should own it. But if you want a little bit more diversification, this is a way to play Apple, then also kind of hedge your bets on other technology at the same time.
Speaking of other technology, let's get stock number 2 of how to play Apple without buying Apple, and that's Skyworks.
Yeah, Skyworks is an interesting stock because it's one of those kind of unsexy plays. It's the guts of the phone. All these teardowns you see that are on the internet, when people take it apart, they decide, who makes what component. Skyworks is in on that. It's an interesting company because there's all of this concern about whether or not the suppliers of the old phones are going to be suppliers of the new phones. So there is a little bit of risk. You never know how secretive Apple is. But just this month, Barclays came out with an overweight recommendation on the stock because they have some kind of business intelligence, whatever you want to call it, that Skyworks is definitely going to be a supplier for the iPhone 5. This company's seen 80% revenue growth in the last 2 years. Due to its Apple relationship. Wow. So it's much cheaper on a per share basis, and you still get that juice of if it's a successful iPhone, and I mean, when have we not had a successful iPhone, you get to play that. So it's a nice kind of small cap technology way. If you don't want to play the high price of Apple, you can still play it with Skyworks.
All right, now if you want a tech fund, everybody knows about the 3 Qs, but there's another tech fund, ETF, YW is the symbol for it. And 1/5 of this fund is Apple stock.
Yeah, and to be clear, the iShares fund, IYW, it's 20% weighted in Apple, and then the top holdings are like Microsoft, IBM. You get other Apple suppliers like Qualcomm in there too. But the world over, a lot of these tech funds are exactly the same, whether it's the QQQ fund.
It's just how they're weighted.
Yeah, I mean, Apple represents the lion's share of most of these funds. If you look at the top holdings, 20% is almost always for Apple, whether it's the Select Spider, that's technology fund from State Street Global, whether it's the Vanguard fund. I mean, if you look at the holdings, mostly it's 20% weighted in Apple, so it's your easy way into the stock and still get some diversification in the tech sector.
Jeff, we got to go, but Apple, we know trees, apple trees too, do not grow to the sky, yet everyone's piling into this stock. Is this dangerous?
I mean, I'm a little worried about froth in tech in general right now. I think the market is kind of a little bit too happy about the tech sector, but every single month, I think it'd be the clickiest headline in the world to write why you should sell Apple. And I research it in depth, and I can't find a reason to sell. So maybe that's a reason to buy. At the very least, it's a reason to hold. So it's hard to vote.
Jeff Reeves, you're not only terrific, but even when your boss is standing right offset staring you down, even then you're doing well. It's incredible. Isn't he doing good?
Thank you very much. Good to see you.
Jeff Reeves, editor of InvestorPlace.com. Good to see you.
And by the way, to see all of Jeff's plays, along with his entire article featuring 3 other ways to play Apple, log on to our Facebook page, facebook.com. Look how good David looks in that picture.
Oh, yeah,
Facebook.com/after
I'm in your shadow.
the bell, and then please click the like button. Tell your